This video will show you 5 steps to go from $1,000 to $1 million in the next few years. Warren Buffett once said, "If you don't find a way to make money while you sleep, you will work until you die." And it's important to note that you can't build lasting wealth without smart investing. Now, you have $1,000, probably from savings or an income you got, and you need a way to multiply it. If you decide to put it in a savings account for a year, you'll only get 0.3%, which is definitely not a good idea. How would you then multiply such an amount in a short period of time? You've come to the right place. Would you rather have a penny that doubles each day for a month, or $1 million? Don't be in a hurry to answer. Wait until you hear our 5 steps in 2024. 1. Exchange-traded funds. Global ETFs are actually becoming more and more popular by the day and are the best investment option in recent years, even now in 2024. As a smart wealth builder, it's a good place to invest your money for multiplication. They're actually the Big Mac in the world of investing. They're super diverse and can help balance out market craziness. It's just like when only a handful of U.S. stocks drove 80% of the S&P growth in early 2023. Unfortunately, most active managers didn't have these stocks in their investment portfolios and hence struggled greatly and even underperformed. This is why we advise that for steady wealth building and wealth creation, you have a passive disposition to investments. Passive investments, like global ETFs, largely offer some kind of exposure to thousands of listed stocks. It basically gives you a diversified portfolio. According to Ibbotson Associates data, the compound annual rate of return of a diversified portfolio of large stocks, such as the S&P 500, from 1926 through 2022 was 10.3%. Global ETFs increase diversification by granting access to hundreds of asset classes. However, without an impressive fund manager, most active managers are very unlikely to beat the market. Now, if you're a first-time investor here, you must understand that it takes intricate financial planning to maximize wealth. If you've never invested in ETFs, we advise that you start with low-cost ETFs. Putting $1,000 into an exchange-traded fund, ETF, is a smart move for newbies because these ETFs, which are beginner-friendly alternatives to traditional mutual funds, bundle together bonds, stocks, and other securities. So you'll get exposed to a very wide range of assets all at once. ETFs are a cost-effective way for any smart wealth builder to diversify their portfolio quickly across various investments with minimal or sometimes no additional charges attached. So they're actually a budget-friendly option. However, you need to do your research about the specific ETF you're eyeing to understand its expense ratio, holdings, and any associated fees before opting for it. If you like how this sounds and you just can't wait to hear the order tips on our list, hit the like and subscribe buttons. It goes a long way. 2. Stocks. Getting a steady stream of income is super important for any smart wealth builder who dreams of attaining financial freedom. As interest rates keep climbing these days, the worth of future earnings might not be as high as it used to be. Some UK companies, like HSBC, Rio Tinto, Vodafone, and Anglo-American, are famous for their knack for paying out handsome, mouth-watering dividends. If you reinvest these dividends using pound-cost averaging, a strategy of investing consistently over a period of time, in equal amounts and at regular intervals, you will easily minimize the risk of your investment and make capital gains. Another good way is using fractional shares. Although this method of wealth building will do a great deal in helping you maximize wealth, it is unattainable without proper financial planning. Rather than investing your precious $1,000 in stocks that you handpick individually, try out fractional shares for a change. Fractional shares will allow you to buy a small part of a huge stock that may have been too large for your budget. For instance, if you've been eyeing a stock that costs $4,000, rather than waiting till you get $4,000, with just $200, you can actually buy a fractional share of the stock. By using fractional shares, you won't need to wait to become a millionaire before investing in big-name company giant stocks like Amazon, Apple, or even Microsoft. And in no time, you too will become a millionaire if you keep up with it consistently. This method makes giant stocks for giant tech companies far more accessible regardless of your current financial status or capabilities. And the best part? You can actually spread your 1,000 investment dollars across a very wide variety of securities. Remember, in the example we gave earlier, you only needed $200 to invest in a $4,000 stock. Yep, so fractional shares actually help you create many more investment opportunities. You will have a very diverse portfolio even when starting small. If you want to get into fractional shares, just look around. 1. Surf the internet for any brokerage that offers them, because not all do. 2. Make a purchase like you would regular stocks or funds. 3. Have your eyes out for any fees that could eat into your investment amount, because wealth creation has to be strategic. A good stock to invest in, however, is NASDAQ. We all know how the tech industry has been making waves financially. In 2023, NASDAQ brought in a whopping 36% return in GBP. That's something. The tech world has been blowing up thanks to giant leaps in artificial intelligence, AI. The ChatGPT launch in 2022 alone was enough to kick things off. A few years ago, in 2019 to be specific, the AI industry was worth $27 billion, but now it's predicted to balloon to $267 billion by 2027. NVIDIA has enjoyed a lot of attention for being in the spotlight as the current AI champion, and its share price equally shot up by an astounding 185% this year. So if you're wondering what stock to throw your money at, you have your answer. 3. Bonds. Bonds, especially short-term bonds, are another investment you should spend your $1,000 on as a smart wealth builder. We can all agree that 2022 was a very tough year for many people, especially those with long-term fixed-income assets. Immediately, the interest rates shot up, and they recorded some serious losses. But last year's wealth management scene was far more complicated. Borrowing money has gotten far more expensive, and it's not just mortgages feeling the pinch. It's hitting the government also. Which begs the question, who does the government actually borrow from? Typically, the answer is you. In the UK, the borrowing rates are actually sitting at about 4.6%, and in the US, the 2-year Treasury rate is only a tad over 5%. Investors are having to cough up income tax on the interest they earn. But here's the silver lining. They're totally off the hook when it comes to capital gains tax, CGT. So if you sell a gilt or it matures, you won't owe a penny in CGT. This perk is especially handy for high-rate taxpayers trying to maximize wealth who have maxed out their ISA and personal savings allowance, saving them a cool 20% on CGT. Forget the misconception that you need loads of cash to kickstart your investment journey for building wealth or even wealth creation. You just need to make sure you invest consistently through wise financial planning. Don't just let your $1,000 lie around. Put it to good use by investing it where it can start earning for you. That's how to build and maximize wealth. 4. Retirement. As a smart wealth builder, you need to prepare for your retirement, and preparing early takes financial planning. If you haven't signed up for a retirement account yet, and your employer offers one, you could be passing up a golden opportunity to build long-lasting wealth. Putting that $1,000 into an employer-sponsored retirement account, like a 401k, could be one of the smartest money moves you can ever make. In case you're confused, a 401k is a retirement plan provided by most employers in the USA, and it comes with tax advantages. There's even an employer match program where your employer pumps in some extra cash based on your contributions. It's like getting free money. So if your employer offers one, don't miss out on this sweet deal for wealth creation. Just a heads up, contributions to a 401k are only made through payroll deductions. If your $1,000 is sitting in a bank account, you need to raise your payroll contributions by $1,000 monthly. This will cut into your take-home pay, but you can cover your bills with the $1,000 in your bank account. Basically, you're shifting that $1,000 from your bank into your 401k to maximize wealth. 401k can even help you double your $1,000. If your employer offers matching contributions, it's definitely doable. The amount they match can vary, but some companies match half or even all of your contributions. With a 100% matching, you can double your $1,000 in no time. If you don't have access to a company-sponsored 401k, or if your employer doesn't match contributions for a 401k, a Roth IRA could be your ticket. Unlike a 401k, IRAs aren't set up by employers. With Roth IRAs, you're investing with money you've already paid taxes on. So basically, your money grows tax-free. Talk about smart wealth building. As long as you follow the withdrawal rules, you won't owe any taxes on your earnings, and as you keep making contributions, your investments will keep growing in value over time. Roth IRAs let you invest in all sorts of stuff, from stocks and bonds to mutual funds and ETFs. And the best part? We'll tell you right after you give us a thumbs up by hitting the like and subscribe buttons. Done? All right. The best part is that you can open one with just about any regular brokerage, including Stash. 5. Real estate. Finally, as a smart wealth builder, you need to invest in real estate. Although turning $1,000 into $1 million within a year is an incredibly ambitious goal because wealth building takes time and wise financial planning. Let's make it practical. Use your $1,000 to invest in a REIT, real estate investment trust, that offers higher dividends and has the potential for capital appreciation over time. For example, commercial properties like shopping complexes and office buildings. You can get an average annual return that is as high as 8%, which is pretty reasonable for a diversified REIT portfolio. This means your $1,000 investment would grow to $1,080 by the end of the year. That is, if we factor in reinvested dividends. With compounding interest in the long run, if you keep reinvesting your dividends, your investment will grow exponentially over a steep tangent. After 10 years, it will grow to $14,700, $54,000 in 20 years, $197,000 in 30 years, and after 40 years, it could be as high as $718,000. So real estate investments may not make you a millionaire in 1 year, but as a smart wealth builder, you can maximize wealth over time by allowing your $1,000 to grow steadily. Now, with wise financial planning, this will potentially lead to significant wealth accumulation over the long term. Wealth creation and wealth building are all about consistency, commitment, and patience in your investment strategy. You can see now that Morgan Housel was right. Financial success is not a hard science. It's a soft skill, where how you behave is more important than what you know. Which of these investments will you be venturing into this year? Let us know in the comments. And if you enjoyed this video, don't miss the next one for anything in the world. Like and subscribe to stay up to date on financial tips on your journey to financial success.